Okay, our instructions for today are using the current year, journalize the following transactions. We have our general journal, cash payments journal, as well as our cash receipts journal. So our first transaction is March 3rd, signed a 90-day note at 6% for $6,000 with First National Bank. So the clue here, this is going to go in our cash receipts because our source document is R279. So our date is March 3rd. Our account title will be Notes Payable. Our document number is R279. Our credit is $6,000. And then a cash debit of $6,000 as well. Then our next transaction is we signed a 60-day 9% note with Dry Creek Company and extension time on this account payable, M288. So that is something that we've done a note like through our company. And the M is a clue that it's going to go in the general journal. So our date is March 18th. Our account title will be Accounts Payable slash the Dry Creek Company. I told you wrong, sorry, it's Accounts Payable, so that's still something that we just extended a note. So our document number is M288 and a debit of $2,000. The next line is going to be Notes Payable and a credit of $2,000. Okay, and then we're going to journalize the following transactions on page 9 of our cash payments journal. So the first one is that we paid cash for the maturity value of the $2,000 note, C255. So our date here is May 17th. And account title is Notes Payable. Check number is 255. And so it's a debit here of $2,000 in the general. And then remember, this is a note, and we also had to pay interest on it. So our next line that goes with it is going to be interest expense. And so then to calculate our interest, we're going to take $2,000 times our interest rate, which was 9%. And then that's when you then times it over your days of the note, over how many days in a year. So times 60 divided by 360, so that gets us $30 for our general debit. And so then we'll add those together, and we actually wrote the check for $2,030. Okay, and then our last transaction is we paid cash for the maturity value of the $6,000 note. So if we look up here, it was a 90-day note at 6% interest. So June 1st, notes payable again. Check number is 263. Our general debit is $6,000. Our next line, interest expense. So we're taking $6,000 times 6% times 90 divided by 360. And so for our interest, we get $90. And that means our cash credit would be $6,090. Okay, so you can go ahead and work on your own as well as the application.